Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 42 on December 29th, 2018. I'm your host, Eric, and in this week's show, we will cover the trades from last week on JD.com, Micron Technology, and British Petroleum, BP. And we discussed three new trades on Mattel, United States Steel, and Halliburton. Now, it's always great to hear from listeners, so if you have any questions about the trades on this show, or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. And I've also created a short video series to teach you all the basics of option trading that you'll need to know in order to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or just visit the YouTube channel for the Weekly Option. Now, there's just one more trading day left of 2018. I most likely will not be active on Monday, preparing for 2019. But if you are, definitely keep your eyes open because these markets have been volatile. So the markets had a nice rebound this past week after the carnage of the previous week's fall. The equity markets gained nearly 3% this week. So the Dow Jones Industrial Average gained 617 points, finishing the week at 23,062 points. The S&P 500 index rose 69 points, ending the week at 2,485 points. The Dow Jones Industrial Average is still more than 1,600 points lower than the closing price on December 29th, 2017. So unless there is one amazing rally on Monday, we will end up having a down year for the year. So, of course, after last year's unreal, greater than 25% return in the S&P and Dow, this is definitely a letdown for many folks. But we've been watching and following along with the market every week. So hopefully you've gotten to listen and learn a few things. Now, as far as earnings go, there are 19 companies that will be announcing quarterly earnings this week. Just as last week, none of the companies that I'm going to be watching are announcing earnings this week. So this is a second week in a row where earnings really aren't going to play a real part of my preparation. Now, the topic for this week is, this time of the year, a lot of people are going to begin discussing the trade types that will make the most money next year. So since this is the last show, this is the last episode of 2018, I figured I would take a moment to share some of my main trading types for next year. And you guys are going to know a couple of them. So my main trades for 2019, my favorites are credit spreads, which we cover on the show. This is where you have sold a spread and collected cash on the way in. Debit spreads, where you actually pay for a spread, but that's what yields the high percentage returns as well. The iron condors. I haven't spoken about iron condors on the show in a long time, which typically combines two credit spreads on both the call and a put side. So you really sort of create this tight range for profit in the market. Ratio spreads, I don't talk about on the show at all, mostly because before suggesting a ratio spread, I really like people to understand the inherent risk, but it's like trading a spread plus one. So if I sell a call spread and then sell an extra call at the short, buy an extra call or sell an extra call on one of the ends, you end up creating this ratio spread. More often than not, you're selling two options and buying one option. So some interesting risk dynamics, but you can actually create a scenario where regardless of where the stock price moves, you lock in a nice small profit of, say, 10 cents or something along those lines. You can do those all day long and just, walk away with money without having any extra risk on, which is kind of great. Not kind of, it really is great. Calendar spreads. I don't talk about calendar spreads here either. Typically, I'm looking at selling the front month and buying the back month. But I do that quite a bit as well in my own portfolio. And occasionally I will dive into some more pure volatility trades like straddles and strangles, and occasionally even a butterfly. Or sometimes I use butterflies to minimize risk if a trade doesn't go well against me. Again, my goal, I know that every trade isn't going to win. So the real beauty of it with understanding options is knowing how to add or change your position, adjust your position so that you don't lose the maximum amount of money, and that you might even be able to lock in a great, a nice little profit. So I use these, just my knowledge of option trading comes in handy. I cover all of these types of trades and then some, a few extras as well, in the Option Studio course. So this is the last week for the holiday price. So if you'd like to learn how to actually trade options each week and make money in 2019, visit theoptionstudio.com. We're running a 50% special right now for the holidays, and we will close enrollment at the end of this week and go back to full price. There's a video to tell you all about the course, and you can find that at theoptionstudio.com. www.theoptionstudio.com. And I'm talking about it because I actually lead that course. You'll have direct email, direct contact with me as well if you have any questions along the way. And we're also throwing in a actual an actual coaching call with me as well. So it's a great price, it's a great offer. If you've been looking at wanting to understand options better and you want to actually trade options, not just learn about them, dive into the show. There's a money back guarantee. Dive into the course. It's a money back guarantee. Super easy video course. Follow at your own leisure. It lasts for 5 weeks. So I'll see you there. So let's dive into the trades from last week. So this, of course, is a one of our first shows where our covered call is going to make money. So our JD.com symbol JD, we looked at stock at $21.08 last week, and we looked at selling the January 22 call and collecting 94 cents. Now that would yield an 8.82% return in 4 weeks. JD.com stock actually ended the week 63 cents higher, so it finished at $21.71. And that option which we sold is currently 10 cents higher than where we sold it. So at this point, we are 29 cents away from the stock finishing in the money, which would allow us to lock in nearly 9% return in just a few weeks. So I would do nothing and just watch the stock. On our credit spread for last week, we looked at Micron Technology, symbol MU, Michael Uncle. Stock last week was $30.32, and we looked at selling the January 31-32 call spread and collecting 38 cents for a maximum loss of 62 cents. Now, Micron Technology stock rose $1.25 this past week. It ended the week at $31.57. The out-of-the-money call spread, which we sold, ended the week in the money and now just has 57 cents of intrinsic value. So the spread rose 23 cents against us. And at this point, I would still look at staying in this trade. The stock has not broken out of its current downtrend. If you look at a stock chart for it, even just the simple moving averages still indicate that the stock could continue to head lower after this small little bump. I think this stock had a nice little pull up based on the overall market rising this week, but I still am thinking this little retracement is going to end and the stock will likely head lower. So remember, when we sell these spreads, we know our maximum loss from the start, and we're still 40 cents away from our worst case scenario. So I'll let this trade breathe a little bit and see if it heads lower. But I definitely will be watching with my finger on the exit button if I really think that it's going to rise to the point where we're going to lose our full amount of money, or I'll look at selling a put spread against it. Now, our debit spread last week was on British Petroleum, symbol BP, Brian Paul. Stock finished the week at $37. Last week when we looked at it, it was $37.67. And I looked at buying the January 39-38 put spread for for 62 cents, and that creates a maximum gain scenario of 38 cents or 61% return on the stock. Now, BP stock finished the week at $38.13 per share, and that's an increase of 46 cents. The in-the-money put spread we purchased is worth less than last week, so we paid 62 cents for the spread. It currently has quite a bit. It still has some intrinsic value left, but it also has 3 more weeks to move against us. So right now, this trade is still in the money slightly because of that 39 put, which we own. The 39 put has an intrinsic value of 87 cents right now, but with three weeks left, it could still move against us. So our break-even price in this trade is $38.38 in the stock, and we're not there yet. So once again, in this trade, I'm going to look at holding onto this trade. I'm still expecting stock to finish below $38 per share in a few weeks, and I'm not going to adjust this trade. So three trades this week. I'm not looking at adjusting any of them, but the credit spread and the debit spread did move adversely against us. So I definitely need to keep my eye keep my eye on it, and just make sure that these trades don't end up turning into significant losses. So let's look at the trades for this upcoming week. The final trades suggestions or examples that I'll be covering in 2018. We'll start off with the covered call. I'm looking at Mattel Inc., the maker of Barbie dolls. Symbol MAT, Michael Apple Thomas. The stock ended the week at $9.94, and I'm looking at selling the January 10 call at 50 cents against that stock, and that will create a 5.63% return in 3 weeks if Mattel stock finishes above $10. Now, this trade is purely for the sake of running the numbers on this show, because I really, given the market volatility to the downside lately, I cannot in good faith suggest buying this stock or very many others right now. But if you own stock already and you're looking for a way to offset some of the risk that you've incurred, covered calls are great still in this kind of market scenario. But I'm not suggesting going out and buying new stock for this week. So you obviously would enter this trade by buying Mattel stock at $9.94, and you look at selling that January 10 call against it, collecting 50 cents. Now, the credit spread I'm looking at for this week is United Steel. It's on the United Steel company, symbol X as in X-ray, or if you like the comic books, X-Men. The stock ended the week at $18.25. I'm looking at selling the January 18.5-19 call spread for 15 cents. Now that creates a maximum loss of 35 cents because this is a 50-cent wide spread. You enter this trade by selling the January 18.5 call at 90 cents and then buying the January 19 call for 75 cents. This, of course, is a credit spread because we're selling the spread, and this trade makes the most money if stock prices stay less than or lower than $18.50 per share. And given, of course, the movement in the markets over the last few weeks, I think we have a good shot at that. I mean, there's so many companies out there that have trended, that have been in downward trends. We'll just see what happens on Monday, and then, of course, how the new year starts, if we're going to get a January rally or not. And then the debit spread this week I'm looking at is Halliburton, symbol HAL, Howard Apple Larry. The stock ended this week at $26.46. Now I'm looking at buying the January 27, 26.5 put spread for 31 cents, and that creates a maximum gain of 19 cents because this is a 50-cent wide spread as well. So max gain of 19 cents or 61% return on your money in 3 weeks. So you would enter this trade by buying the January 27 put for $1.51 and then selling the January 26 half put for $1.20. This is a debit spread because we're buying the spread. We're buying the higher or the in the money put. And this trade makes the most money if stock prices stay below $26.50 per share. So that's it for this week. Finish this year strong and get ready to have your best year of profit in 2019. So biggest questions I ask myself, and I challenge you to do the same, is ask yourself, what will you do differently this year? What's going to make this year different? Are you going to trade? Are you going to learn a new skill? Are you going to manage your money better this year with regards to trade and risk management? Don't forget to watch the video I created at www.theoptionstudio.com. Happy trading. See you next year. Have a happy new year. So long. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.